Good afternoon, everyone. It is 8:01 a.m. Chicago time. Happy Friday to all. It is the 20th of July, 2018. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning. Interestingly, the NASDAQ is holding positive, just 2 points, 1 point, half a point. It's just popping around right now. There it is, just teetered on unchanged. Crude oil is also almost unchanged, up 5 cents. The leader today is the Japanese yen, up 52 pips or 0.6%, followed by the euro and gold. There's a lot of a lot of content coming out of U.S. President Trump on currency manipulation and how he disagrees with the rate policy and that he doesn't believe interest rates should go up and all of that stuff. We saw a big reaction yesterday at about noon Central with regards to this. He's basically looking to influence the Fed and interest rate policy. And so what that's doing is it's moving money into gold and so on. And so we're seeing that. We're seeing the yen, the euro, gold, the cable all popping a little bit higher. The risk sentiment is the allocation this morning is to safety. Risk off. The DAX is down 200 points, 1.6%, followed by the Euro stocks down 1%. That's the big picture. And so that's where we stand this morning. As far as what we're expecting today to interrupt the auction, there's nothing on deck for today. For those of you who are in crude, it doesn't really impact you, but Baker Hughes rig count, several releases from Europe this morning. And so we're not expecting much there, much in terms of an interruption. Let's take a look at what we expected yesterday. So yesterday, the key play for the day was for test to 28.1275. Remember, we talked about this. This is this area, this stock zone right there. 28.1275. So I'm looking for responsive buying into that area, impulse down, and then a push lower with the expectation of a test at 2800 and a potential for a push to 27.96 or so. Didn't get to 27.96. It did stop and turn at 2800. The top is on the dot, 28.1275. That doesn't always happen that way, but it turned right on the spot. So we saw a strong impulse down. So scenario one was in play. However, we didn't end up holding lower prices. What we did is we pushed back up. We extended the range up and no range extension down and held, although we had our point of control move and stay below the prior range. So let's take a look at what actually happened here. All right, let's get rid of this. So there it is. It opens, tests down 1 point, and then it looks like an open test drive up. We do get responsive. That's the important part. We get responsive buying. In other words, markets responding to the lower prices. And then we have an impulse down of 11 points, consolidates, and then continues to extend to 2800 and a quarter, missed the 2800 by a tick. Remember, this is a big area here. And then it rotates back up to the mid. For me, this was the only clear, legit setup for the day. Actually, the setup is back here. And then it returned back to 2802, where a lot of volume went off earlier when we were down here by 2,800. And then from there, it just starts to drift up and trade the middle. So it's stepping all over Wednesday's low where we started. We got a minor range extension up. This is a normal day type, small extension up. And then we finished with a point of control below the prior day's low. The prior day's low is this green line right here. So the green mark right there. Point of control moved lower. The low is lower than Wednesday, so one-time framing up has ended. Is being interrupted at the moment. Values lower, point of control lower, and overall the market could not hold. Buyers could not move and hold these prices higher. Now, I would have expected us to resume our tests higher if the buyers were able to come back and retest this point of control and finish somewhere in here. That would have set up a move higher pretty well. But what it did is it tested up, and we saw that the key price beyond 1275 was 14 right here, the key LVN. And that was the target for any push up, and it stopped just 3 ticks below that before it turned back, and it ended up bouncing below the prior day's range, below the mid. So finishing week with a profile that's somewhat balanced, with a small skew to the downside. So that's what we ended up with on our day session. This is what we saw overnight. Just a lot of just two big drops that occurred during the Asian Open, and just held steady there. So it's let me see what is going on with my news feed here. And so these two drops, the market, this is an impulse down right here at to 93.50, and then the pullback went pretty far. It went all the way back up to the close of the prior day of yesterday's session, 2805.75, right here, 575.06, and then a second drop took place and pushed and extended the initial drop to 93. Pretty good taper at the low to mark the fact that there was less and less interest in trading as prices went lower, and that sets up this run up. The top looks somewhat weak to me, but overall, the overnight session is a lower low, lower high to yesterday's session, and we're starting to rotate back down, in my opinion. So when we look at the composite, this is the composite. These are bars made up of daily bars, and I represent these in volume bars. So we're looking at a daily bar that represents the RTH session. We've pushed as high as 18.25, and yesterday we rotated down to 2,800.25, and the overnight session has pushed down into the 90. Let me see, the overnight low is 93. The mid of this entire swing is at 95.25. We're continuing to eat into this rally day from Tuesday, and what I've done is I've extended the composite, the micro composite in this area, stopped here before the trend day, and now with us rolling over, it's extended out. The point of control of this area is 27.96, which we've tangled with this morning. And the next target down, if we continue lower, is 91. The big target down here is 27.88.25. That's right here, 27.88.25, right there. It is an MC HVN. for the entire area. It is an MCLVN for a portion of the microcomposite and so on. And you could see there have been tops right here, top, bottom, top. I didn't draw this line very well, but those all meet at 27.88 and a quarter, and that's the big target below. And that's what I would be aiming for on any push down. Okay, so let's take a look at what we're expecting for today. But of course, it is like Friday, so please take a moment to hit the like button on YouTube and get the upvotes going. That helps me out. So take a moment to do that, please, before you leave today. And let's take a look. So let's extend this baby forward. Build this profile up. All right, so we're opening in a small gap down. Beneath yesterday's action. Chances are President Trump's going to continue to pitch in today, so I expect a couple of erratic moves potentially. So keep an eye on, keep an ear out for your news feed if you have one. This morning, the expectation is an open auction out of range that fights this 2800. I expect us to pop up above and battle through the lower end of the range from yesterday, 2802, 2803 and a half, likely to present some resistance, consolidate. I expect us to regain. I'm looking for responsive buying this morning. I expect us to regain the point of control today, and then finish up either up here or extend lower into the overnight low on scenario 1. Okay, scenario 2. Scenario 2 gets responsive early, gets rejected out, and battles at yesterday's low. I'm looking for 2802 to hold this price down, and then I'm expecting it to roll over and start pushing through 2796, consolidate down here, and then start to work its way down to 2791, and then 2788 and a quarter, where I expect it to just battle out and hold steady, balance out. I expect a hump to build the lower end of the range at 2788 and a quarter. That's the secondary scenario. The secondary scenario basically is dominated by sellers. Sellers did a good job yesterday maintaining control, and sellers got paid for their effort yesterday, and I expect that to continue into today. We have here is a market that is acting toppy temporarily. So we've pushed up, and then we have a flat top, and we're starting to roll over. And so I'm expecting a continuation of that in either case. Now, the third scenario is for to test down, impulse up. So whichever way the first impulse takes place, just like yesterday, that's the direction I'm going to trade from until that impulse fails, which means we take all of it back. We get our first warning at 50% of the impulse, but if it take the whole impulse back, then that changes things. So scenario 3 is looking for a drift down, impulse back up, and a push through yesterday's range back up to 2814. I won't draw that on here as it might confuse things, but that's how things are setting up. Okay. Good luck today. It is Friday. Please remember that getting yourself in trouble on Friday because you decided to make the market do what you wish is probably a really bad idea. It's pretty much always a pretty bad idea. So don't forget that Friday's a day that most people get themselves in trouble. If you find that you are not finding Good opportunity. It is better for you. Believe me, I've been through this many times. It's better for you to finish the day down than to fight. Friday just doesn't, as the day goes on, especially summertime, as the day goes on, it just isn't worth fighting. So the opportunities get smaller and smaller and smaller as you go into Friday afternoon, of course, barring any news coming out and creating volatility. So this is the kind of day where you need to be keenly aware of your emotions. It's the tail end of the week, so you're probably looking for some recovery time, and your discipline may not be all there. So just be aware coming into Friday that you need to be extra vigilant as a trader, as this is the riskiest day of the week. Good luck.